What's going on, everyone? Good morning, good afternoon, good evening. Hope you're well. This is Jordan with Conquer Trading and Investing, and we're getting ready right now for our live stream. Glad to see you all here this morning. There's a lot to talk about. We're going to try something a little bit different this morning, only because Sunset Ventures, Blair, Hempill, Bah, Jesse, Heath, what's going on, everyone? Wow. So the biggest thing of the day for sure is that the markets so far have completely taken away yesterday's rally. Let me look on the daily time frame with you. US equities currently rallying about 0.75% this morning, but look at this. This was yesterday's rally, and look at this smashed. Not a good sign. Not a good sign. Basically, the markets, I expected them, to be honest, to hold that rally for at least a few days. Smashed it. Let's see what New York brings today. There's a whole lot to cover that's going on, a lot more than normal. So we're going to begin taking a look at it. Peter, what's going on? We're going to really, we're going to get into the charts in just a moment. But before we do, let's really get a clear view of the current situation. Let me turn off all these notifications so that you all have my full attention, as it should be. So the one thing, and the markets continue just this little bit of rally right now as the US opens. Let's see what US does here. By the way, I do want to just take note here that with the markets down ugly 3.5%, 2.5% right now, Bitcoin was unchanged. All right. Just to get, yesterday we were talking about that tight correlation between S&P and Bitcoin. It seems to have broken last night, probably because Peter Schiff tweeted something about it. All right. First, coronavirus, which is not even what I want to get into, but I want to talk about it. I want to start going over some important stuff with you. Did I just say coronavirus wasn't important? No, not at all. I see about a 20% worldwide increase in cases over the last, I'd probably say, 3 days. That's pretty drastic. And obviously we're not getting in the US any type of realistic view of how many cases there are. US is now reporting 1,000 cases. I have to assume that's much higher. All right. That's first. All right. So first of all, headlines. We're going to read some headlines really quick. We'll blow through this in just a couple of minutes. Don't be fooled by the oil price rebound. I completely agree. This core CPI jumps to the highest in 12 years. This is a little bit worrisome. You can see over here, you can see that the CPI numbers are, and mostly this is between rent and healthcare. Two things that are pretty important in everyone's lives, right? This is worrisome because right now, why is this worrisome? Right now, as the coronavirus situation is taking a foothold, the answer is going to be stimulus from governments and then central banks. What that's going to do is obviously create more inflation. It's already out of hand. I don't care what they say. If anyone has done any grocery shopping, they understand that prices continually are rising. If anyone is paying for any education, if anyone is paying for any healthcare, anyone's paying rent, inflation's already here. What's going to happen with all this printing? So this is what we talked about as far as the S&P giving up the gains last night. We talked about the December of 2019. Was it 18? Huh. Well, I don't know. I thought that was December 21st of 2019 that Muchin called in the dogs, and that was the low. I'm pretty sure I'll stick by mine. Merkel, this is interesting. Merkel is open to scrapping Germany's zero deficit rule. Okay. Now, here's what's interesting. We're going to read between the headlines over here. Now, she's saying that 70% of the Germans could contract the virus. All right. She went before Parliament and she said that up to 70% of Germans could contract the coronavirus. And at a 1% death rate, that would be about 500,000 Germans. But the death rate of the coronavirus is, as the WHO has said, is closer to, they're saying 3.4. It's rising. It's going to end up being, I think, somewhere around 4 or 4.5%. Even in mainland China, it was 3.9%, right, of what was reported. And we know that what was reported is not too accurate. I feel like by saying that there's 70% of the Germans that could contract the virus, and at the same time, as Italy's closed off its borders, they're not going to close their borders and keep them open. Maybe she's just trying to scaremonger in order that they could go into deficit spending. That's what I'm thinking is happening. Now, this is another important headline as the ECB is getting ready to meet tomorrow. Christine Lagarde, the president of the ECB, is saying that we could face another more fear-mongering, a 2008-style crisis without coordinated government action. Are they going to disappoint tomorrow? Are she calling for the governments of the EU to actually do some coordinated government action? I'm not saying that's the case. I think the ECB is going to act tomorrow, but this headline has me. I'm always worried about the downside. And this headline has me worried that perhaps that she's thinking, or they're going to disappoint and place the onus on the governments. So that's something really to keep at the forefront of your mind as the ECB gets ready to meet tomorrow. The UK, as you all know, I know you all know, they cut 50% yesterday. The EU's also gone ahead and spent, I think, $2 or $3 billion towards their healthcare and prevention of the coronavirus. The UK actually seems to be forthright, saying that, listen, the impacts from the coronavirus in the near term are going to be pretty severe, and we have no idea what they're going to be in the intermediate term. They seem to be the only ones, right now that are kind of forthright in what's going on. And thank you, Peter. What's up, Michael? John Alexander. What is going on, my friend? Good to see you in here. Absolutely. Let me continue with a couple of different important things, and then we'll get right into the charts. I'm going to include these, some of the links that I mentioned here. I'm going to include these in the newsletter that was sent out almost daily. Here's the link to that. Alberto, what's going on? There's some important links here that I want to share with you. I'm going to include these in the newsletter. By the way, we'll start here. Raul, the founder of Real Vision, has really, really had his pulse throughout this whole situation for the last 12 months, right? This interview with him, I have not watched yet. I'm going to watch it absolutely today. It talks about who's going to get the hardest hit, contagion, quarantine, trade of a lifetime, the pension fund bubble, oil war, globalism, modern monetary theory, the bailouts that are about to come, gold, Bitcoin, will scrap Ethereum, retirement. I'm going to include that link. That's an interview that I am so excited to watch today. We talked about the UK spending $5 billion. I said 2 to 3 billion on their healthcare system in response to the coronavirus. Germany's only adding 300 million. Put that in context. This article I skimmed through this morning, but I'm going to read later. Danielle DiMartino Booth, a former Fed chair. I follow her regularly. She's amazing. She's talking about why the Fed can't let bond yields fall to zero. Again, I said the biggest risk in the market right now is that next week the Fed disappoints with a rate cut of 50% already basically priced into the market, maybe even 75%. It talks about why, this is coming from a former Fed chair, why they can't let yields fall to zero, why they might need to actually institute some fake yields. This article I think is really important. I'm going to share that link with everyone. This is an update on the milkshake theory, this thread on Twitter. I'm going to include this one also because Luke, who's kind of, these guys are like nemesis. He was like, listen, this is a good thread. I'm going to include that link for you. This one's for me. I don't know how many of you would be interested in it. I'm hyper interested in it. Adam Back, this guy is legend. He's talking about what's coming next in Bitcoin with Taproot and Schnorr signatures. It's something that I need to actually increase my knowledge on. So I'm absolutely interested in hearing this interview. I don't think that you guys might be. I'm not going to include that link unless you guys actually message me if you want it. And then the other thing that I wanted to end on as far as the news today is the Bank of Japan is talking about, when they meet next week, also adding to the easing. I'm not sure what type of immediate effect that, if any, that will have on the yen. All right, let's get rid of this. And then let's also finish this with the conversations already starting to the bailouts. They're already talking about further bailouts. I think the bailouts were an enormous mistake back in 2008 because all they did was make, and we said it back then, all they were going to do is make things exponentially worse. Listen, we're talking about our children's future and their children's future. We're stealing and robbing from it. It looks like we're getting, first is going to be the shale companies. What's going to be next? Probably then the airlines, then the automakers. It's just getting started. Hopefully they don't bail out the banks this time, but the conversation's already started. Oh, and this is actually for my own interest about the coronavirus and why we need to act now. All right, let's get into it, everyone. Time to pull up the charts. Mata, good morning. So since we've been talking markets on the opening about 10 minutes now, kind of off the lows of the day. This is the US equities. They're off the lows of overnight lows, I should say. Too soon to see or tell what is going to happen. I have to be honest why I said that Bitcoin wasn't really tracking the S&P, which is down 2.25, and Bitcoin is down now a quarter. It kind of is. You can see that. I see that same pattern there at least. So I regress a little bit. All right, let's get into it. We're going to blow through the charts first. So overall market conditions, and I'm going to probably start on the 4-hour. They remain choppy. All right, they remain choppy. The DXY yesterday put in some really strong gains, but that was off the strong string of losses. So that's just more than anything a retrace. It came into this resistance level and it's not really been able to do anything so far. It's retraced off it, but it is consolidating. Listen, right now the thing at the forefront of my mind is tomorrow is the ECB, how that is going to affect obviously the euro. I put on the newsletter a trade that I'm watching. We'll look at it in a second. That's the euro Canadian dollar. But let's just keep going in order right now. This right now, it looks like it's just consolidating off the lows. It's too soon to tell what's going to happen next. The markets are choppy and not clear. Let me actually pull up to the 8-hour. Euro British pound. I have to be honest. I like how the UK is acting right now in the face of this crisis. What's happening over here? Let's pull up. I could see the resistance right over here, right? We've come into the resistance. We're coming off with the ECB meeting tomorrow, taking a speculative short here against the immediate trend, but not the long trend. Long. Obviously, the trend is down, right? We've retraced. It looks to me, I would say, close to 50%. There's probably a 50% fib right here. There's a retrace right here into resistance. And although we're off the highs of the day, the ECB is meeting tomorrow. Again, what you have to watch out for is the ECB disappointing. Not to say they will. I think they need to come in big over here. Every other central bank that has gone ahead has been easing over the last since the Fed cut rates. Surprise 50%. So right. Could have been a little more proactive shorting this into the resistance up ahead. Australian dollar, New Zealand dollar has come out off the breakout, now back towards the lows over here. I wouldn't touch this at all. Um, I don't like it. Yesterday when we looked at it, it was the same exact story. It's been too volatile. And although clearly now we have the momentum to the downside, we're coming into an area of support over here. I prefer to stand aside completely over there. New Zealand dollar, Canadian dollar. Yesterday, you could see this pulled back in here, held this area of support. Canadian dollar continues to be looking extraordinarily weak. I can't say much better about the New Zealand dollar. New Zealand dollar and Australian dollar, I'm going to talk about them together and grouped. Over the past few weeks, they have been hit so hard. It appears right now that things are stabilizing in China. President Xi declared victory yesterday. Now, the worry is as people start going back to work inside the factories, inside the metros, on buses, if whether or not we receive a second wave of infections. And if we do, it's going to be really scary for all of us worldwide. And so that's the thing to watch out for. The reason I bring that up is because if we don't, and we start seeing actually a recovery starting in Asia, I think that's going to really benefit the New Zealand dollar and Australian dollar. Now, I'm just trying to forward think here. I have absolutely zero. I have zero insight into when and if that's happening right now. We need more information, and that's why most of us right now are on the sidelines. Mark, morning. Good to see you all. Solinki, Peter, most people have already gone back to work. That's smart. They're avoiding. Peter's on the ground over in China, so appreciate that input, Peter. I know that you've been out of the house last week now. Are you? I'm curious whether or not you're continuing to self quarantine or not, as much as you can. How you're feeling over there? Dinkar, I'm not following exactly what you're saying at all. You're asking if I follow positions of other traders. The only as far as what I follow is I follow how they're positioned in the future markets. On Friday, it's released by Forex Live. I don't trade around it whatsoever. I trade off the charts. Always have that not only overview, very aware of what's going on around us, fundamentally, because it's uber important. And then off of that, we come down to the charts. Swiss franc today was excuse me, let me start over. Japanese yen was the strongest going into the session, followed by the Swiss franc. And then we have Canadian dollar, the weakest, right? So we jump back on. Markets now fading everything back towards their lows. We're back towards we've been. And to say the least, that's volatile. It's trading. I'm on the sidelines. I know a lot of you are also on the sidelines until something becomes a little clearer. I think it's the place to be. ECB is acting tomorrow. I might get ahead of that. I'm going to show you what I'm looking at going into the ECB tomorrow, see if something develops. Actually, that link is already provided in the chat for you. Dollar stabilizing here versus the yen. We're in no man's land. We're definitely in no man's land with the support down here. The closest resistance, the closest strong resistance, I'd say is up near 107. So we got a while to go. I don't think there's any edge either which way. Dollar is a big one, right? Oh, you can see that. This is, I was playing with too many charts. And when I have too many charts open, when I make annotations on one, unless I save it, they don't stick. So You can see here on the euro US dollar that overnight, yesterday the dollar was so strong, yields were rising. Markets came off then, equity markets, and that reversed itself again. We came into this area that we had marked as support, and sure enough, once again, that's where we leveled out. So, you know, with the, I'm leaning towards the euro weakening in the next 24 hours with the ECB meeting tomorrow morning. Um, if 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 the equity markets bleed out and we have another down day, another 7% down day, I would have to say all bets are off the table, and I would imagine the euro will continue to strengthen versus the dollar. That's what I'm saying. Nothing is very clear right now, and when nothing's clear, the best thing to do is be on the sidelines. If you start doing that, you're going to improve your trading off the bat pretty strongly. Pound New Zealand dollar. All right, this actually now it looks interesting as the New Zealand dollar has retraced. Again, try to remove this from your mind. This was on the open on Monday in Asia. If you remove all of that from your mind and then you kind of look at things right now, I see that price is basically consolidating towards yearly, if not more, highs, right? This looks pretty bullish here on the pound. Again, this is just after a cut today, 50 basis point cut out of the UK, still stronger than the New Zealand dollar. This is pretty bullish for me. This is pretty bullish. And that also being said, I like the moves that the UK is making right now, as far as what they're doing to protect and be proactive against the coronavirus. If things continue to get worse, it's going to bode well for them. So that's something that I want. Not that New Zealand's not protected; they're basically in on their own island, away from the rest of the world. Vima, what's going on? We're going to check everything. I'm going to go through right now in order. Euro, Canadian dollar. I have an area of supply down over here. I don't like that my chart's not set up. Check the link I sent where I gave a write up on the euro Canadian dollar, what I'm looking for. If tomorrow the ECB comes in hard, and if the euro sells off hard and there's a spike in the euro, right, which is really on the table, I would expect there's a good chance of that happening. And if that happens and we come down into this area of supply over here where this blue box is now, I will be looking to actually take a long position over here, because in the long term, I definitely expect the Canadian dollar to be weak, to continue to weaken. Again, like we talked about this morning, even though are you seeing oil actually down now? This is so interesting. That's what we expected was going to happen, that oil is going to wind up fading. I think that we're going to see continue oil prices. When I say nothing's easy, people are already talking that, oh, Saudi Arabia and Russia are actually going to come to agreement. I don't know. Saudi Arabia is posturing pretty hard. Russia's digging in. I foresee a longer battle. And more than that, I definitely foresee the continued global slowdown right now. If and when that changes, and the only way that's going to change, maybe we'll be able to tell by the end of April, if we start seeing actually that, the outside of China, we've seen that same regression in infections, and we see the rest of the world recovering, and we didn't see a second wave in China, then we could start looking towards perhaps, okay, all this stimulus and easing from the central banks and governments is going to be enough to counteract it. And now we could look towards, a period of growth. We're absolutely not even close to there. And that's why I want you all to check out that Raul interview today, because Raul has been pretty spot on. Let's see what he says about going forward. And I know that, he's actually talking about a depression. I'll leave it there. If we get a spike down into the supply over here, if the euro sells off hard, I'll be looking to see how price reacts over there. This is where I'll be focusing my attention. And if we get that gift, if we get a spike down, and we start reversing upwards, I'll be focused on a smaller time frame. I'm going to be looking to take this trade on the euro Canadian dollar. Australian dollar, Swiss franc. All right. Again, take away this spike over here from your eyes when you're analyzing these pairs. Still under lots of pressure. I think we're actually going to come down and revisit these lows eventually. If I get the opportunity, though, and this is my own mental note here, if we could retrace higher into some resistance, I'd prefer that. Now, the markets are giving up their gains today, but you were just getting started here in New York. We're just getting started. I'm not so sure that I'm not sure at all what's going to happen. That's why I'm showing patience, and that's why I'm waiting for things to be more clear. But I would love the opportunity to come up into further resistance to be able to sell this. New Zealand dollar also against the Swiss franc, too, that I'll keep my eye on. Euro Swiss franc, very clearly stay away from this pair. Just stay away from this pair. The euro with the euro have been now for 2 weeks uber strong. You could see it has not made any gains on the Swiss franc. We know that the Swiss has, well, we hypothesize or speculate that the Swiss central bank is intervening here, and we all knows what happens when they give up on an intervention, right? We saw that happen in the past, and this could drop and get ugly. I know a lot of traders are tempted to be buying over here. Do not do it. There's zero reason to do it. It's absolutely dangerous. Euro Australian dollar. So if there, again, this is similar to the Canadian dollar trade. If you get any type of pullback with any euro strength, depending on where it is, we'll reevaluate that. I'll be looking to jump on to the Canadian dollar over the Australian dollar, simply because of what everything weighing on the Canadian economy right now, as well as oil. And I'm leaning towards China recovering, which could benefit the Australian dollar. So similar play though. We'll keep a watch of it. Canadian dollar, Japanese yen. Again, you're looking at the strongest versus the weakest pair today, going into New York at least. And again, this is something that if we get the gift of Japanese yen weakness, remember they're meeting and looking to ease next week. If we get any type of retrace in the yen, ultimately we're still looking to sell those. We're looking for further strength, and perhaps a lot further strength, right? So we'll be looking, if possible, to sell any retraces. We're not close to having any type of retraces comfortable selling in. For me, actually, it would be up here, close to 79. So waiting on the sidelines, waiting. New Zealand dollar making some big, again, remove this. And if you remove this spike down over here in low liquidity, it looks like that, first of all, you saw this low taken out, and now we're trading upwards. It looks like a bottom, a double bottom has temporarily been put in. I think it's too soon to be looked to selling any retraces over here. Of course, yesterday, you did see the dollar firming up and the yields rising on the dollar, and a lot of dollar strength coming into the market. Again, this is why, and this is the most important thing I can say to you. Things are not clear. You're much better off being on the sidelines until we have some clarity. Things are very choppy and things are very murky. All right. Back, are you talking, Peter? I think you're talking on the euro Canadian dollar. So when I'm looking for a spike, I'm just envisioning the possibility is that tomorrow the ECB comes in hard, right? That possibility is entirely on the table. Right now, over the past couple of weeks, the euro has appreciated way further than I'm sure Christine is comfortable with. We already have a lot of factors weighing on the European economy, and now you add in a higher euro affecting their exports. They're not happy about that. I think that they're going to act. The only thing that I'm worried about is that perhaps she's going to, put the onus on the European governments to act because they're kind of out of bullets. We saw that headline, so that could happen. So I'm not saying this is going to happen. What I'm saying is, if this does happen, if they come in hard, and you see, this would not be really unrealistic for this type of move to happen. You've seen here an equivalent move without the ECB acting from right here to here. All right, so this could very well happen. This is the first area of supply. It's above this area of resistance here where my mouse is right now. I don't know why these alerts are here. I truly didn't add them, and I would like to remove them, but I'm not going to do it now. Fool around with you. There we go. All right. So this is, I'm not saying this is going to happen. I'm saying if this does happen, I'm ready to act. I have my plan in place ahead of time. I see over here the top area of this resistance. This area is now support, the bottom of this blue box. This is the first area, the nearest area of supply. This move came up hard and quick, and it could retrace just as hard and quick. And if we do come into this supply over here, long term, long term, and by long term I mean even over the next couple to few weeks, I expect that the Europeans are going to be outperforming. The euro is going to outperform the Canadian dollar. I'll look to buy over here, right? I'll look to buy over here, and then I will wait for a retest of the highs over here or something higher. This is a trade I will only take if and when it plays out as I've envisioned it. But I'm ready to act tomorrow if we get some type of quick price movement into this area over here, and then I see it retracing off. All right, let's find out where we were. Pound Japanese yen. Again, we're in no man's land. I have this area, this trend line support over here. I have horizontal support, and I don't have any resistance to a little higher. Just simply no man's land. And again, I know everyone is. I don't see any trades right now at all. Australian dollar, Japanese yen, same exact thing. We're just, there's no edge whatsoever to be taking a trade on any of these right now. You have to question what you're doing and why you're doing it. It's not helping you. Euro, New Zealand dollar. All right. This looks very similar to our Euro, Australian dollar, Euro, Canadian dollar. Again, I do believe that the best place to pick this trade up is going to be on the Canadian dollar. That's what I'm watching for. Nothing to add there at all. Australian dollar, Canadian dollar. Ooh. If I look at this, and I don't know if you guys see it like the way I see it, but automatically when I look at this, this is what I see. And I just see this big area of sideways movement. We're seeing this also, right, on the Australian dollar, New Zealand dollar, similarly, except that now the New Zealand dollar is breaking out versus the Australian dollar. But although the Australian dollar had broken, the Canadian dollar had broken out versus the Australian dollar, it's not retraced back into this box. Just stand aside. Australian dollar, this looks good in that it's retracing a little bit. Again, if you guys can't see that there's simply no edge right now, that everything is murky and unclear, then I really want you to focus in on that. It's a stark difference to last week when it was so easy to ride certain trades, right? Australian dollar, New Zealand dollar versus the yen and Swiss franc. To ride hold those things were really clear. There were other trades as well people took advantage of. Once the US dollar, once the Japanese yen broke the 109.71 level, but right now things are not clear. So I'm enforcing that because the best thing you can do right now is just wait and stand aside. This is beautiful. This is we spoke of holy guacamole because I first of all, I'm the worst trader. Let me start there. Why? Because I took my long over here, right? And I got out of it over here. And I thought I was a hero, right? Great trade. I was looking for the retrace. I didn't get back in over here. But nevertheless, I'm on the live stream telling everyone as prices over here, we're going to take out this level over here. We're going to take out this level over here, and we're going to come up to 139, and we're going to take out this level over here. I put like a near-term target in of 1.39, and there we are. I'm the worst trader, and so this is a perfect example of why I keep talking about, and the reason when I talk about it for you, what I'm doing is doing that for myself, right? Because although I nailed those trades last week, I took profit way too soon. The one on the New Zealand dollar, Japanese yen, Australian dollar, Swiss franc, New Zealand dollar, Swiss franc, all of them great trades, but they were terrible because I didn't hold them. I told everyone this is the environment where you need to push trades. You could just different environment. The past 3 months and the past 2 weeks are much different than we've been in for years, and you got to adjust. Not only do you got to adjust, you got to take advantage of it. You got to take advantage of it. You're not talking about now making the amount of money that you normally, would make in a month. You're talking about making, the type of money you can make in a year during that same period. You got to be focused. This was a big mistake on my part. I should have held this trade. I should have added over here. And the reason I'm really focusing in here right now on this is because these trades are going to happen again on different pairs, but we're in that type of environment. Nah, come on, Jesse. You were pushing your trades. You were pushing your trades last week, and that was the time to push it. And now you're on the side too, Jesse. You're 100% there. You were pushing your trades when it was time to push them, and you're on the sidelines now. I'm sorry, everyone. I have to take a 1-minute break. Please excuse me. And we're back. U.S. equities now at the best levels since New York entered. Not really. Pretty much the same. HIL, Peter. We got 5 of them here. Yep. We're talking about Iron Man gold. I think this is the trade to focus in on. Over here, you have gold and euros. ECB set to act tomorrow. Gold is continued to be a beast. Well, not really. It's just consolidating right now. Clearly, with what's going on right now, as far as all governments, central banks easing, adding stimulus, CPI rising, gold is the place to be, unquestionably. This looks like a great opportunity here. This looks like a great opportunity here on gold versus the euro. You could see that this looks very good. You could see us consolidating. The last move up. Euro has been so strong the last couple of weeks. Looks like a good opportunity. That's why I have this chart up over here and continue to have it up. All right, let's continue. We're on the US dollar, Canadian dollar, New Zealand dollar, Japanese yen, New Zealand dollar, Australian dollar, kind of strong today. They're coming off of just retracing really sharp moves. It's painful to look at this right now for me. So painful. This is where I got short up here, right? Again, you think that's a good trade? I left so much on the table. It's ridiculous. Look, I don't think it's time yet. I'm looking forward till next week. I'm looking forward to the Bank of Japan easing next week. Of course, we're seeing the markets on a runaway course right now. Equity markets are just pushing everything. But next week, right? I mean, next week you have the FOMC meeting, and then followed by that, you have the ECB set to ease. So what happens if the Fed disappoints? The base case is the market's pricing in 70% chance that the market's cut by 50 basis points next week. What happens if the Fed disappoints? This is why I'm going to include that article by Danielle. If the Fed disappoints, you start seeing the dollar firm up. You start seeing the yen weaken because the Fed signals to the markets things aren't as bad as everyone seems, and then you have the Japanese central bank come in and ease. If we get the yen at some weaker levels, it's an opportunity to position in. Is this the highest retrace we're going to see over the next 3 to 6 months? Maybe, but I'm not willing to take a stab at it yet. I genuinely think that the U.S. is purposefully hiding the amount of and the situation of the coronavirus. It's the first time I said that. I've been believing it for a couple of weeks, but the fact that they're simply not testing and that they messed up the tests again, it's leads me to believe that they're purposefully trying to subdue the numbers, hoping that by the end of April, the situation subdues itself. And I think it's a very dangerous game to be playing. Yeah, I think, yeah. So, man, I think everyone, unless you just started trading, right? Over these past 5 years, everyone should have been accumulating gold. We were back down when we were towards 1200. But anyway, I digress. You got to own physical gold. Got to own physical Bitcoin. It's the world we live in. Not only that, you should really want to. So Euro Japanese yen, this could get interesting next week. I have no idea how to play this. Everything is very unclear. And if you're not seeing that, then please let me know what you're looking at. I don't see any clarity whatsoever in the market. And I really think that I'm on the sidelines outside of getting a gift on the Euro Canadian dollar, or perhaps I'll look right now. I see this consolidating in the dead center. So this line was drawn in liberally. There's the possibility that I position myself into this trade. But and the way that I take this trade is through a synthetic pair, meaning that I have to sell euros versus dollars and buy gold versus dollars, making this synthetic cross. Now, to be honest, with the ECB meeting tomorrow, and I'll update anyone. I'll update people through the newsletter if I'm going ahead and putting this trade together later on. But the way that I would enter this trade is actually first through a short Euro US dollar, and I will not be entering long here on gold against the dollar for the other part of that synthetic trade just yet. This has further room to consolidate. This has extreme. This could actually get really hurt next week when the Fed meets. If the Fed comes in and disappoints, I'm not ready to buy gold at these levels or add to positions at all. And so if I'm looking to take on that synthetic trade, the gold euro trade, the first leg of it will be just the short the euro versus the dollar tomorrow, going into tomorrow's ECB. As you can see, I'm talking that out for myself. Iron Man. So I don't know, not sure where you got those numbers from, but yeah, there's been children under 10 that have died. It's a low number. It's 0.02%. And I could pull it up actually. Here we go. I was seeing if I had those number handy. I don't. You could Google that. You could just Google and I'm sure find a graph pretty readily and easily. But there have been people that have died in all age groups, including kids. Now, it's true that even though kids could get infected, that they generally don't get sick or as sick as the other age groups. And it's true until you hit over 60 whereas the death rate goes up to about 15%, I believe, that they're much lower for the younger demographics. But all in all, the problem is that even the young kids, when they get infected, they're passing on the virus, to their parents and grandparents, and that's a big problem. Anyway, we got a little sidetracked over there, but only because I don't want people spreading misinformation. That's true. The doctor that first, and he was extremely healthy, Blair. That guy was a young guy, 34, 35 years old, who died of it. Also, the first American, one of the first Americans that caught it, he released yesterday a summary of his experiences. This guy was also young. He was, I believe, 42 years old. He said he almost died. He said he never felt he felt his lungs and the system was collapsing. To get through each hour was the greatest trial of his life. And he said if he would have just gave up for a second, he would have died. Um, the problem is that as more people get infected and sick, the hospitals cannot handle the demand. And then eventually it comes to a point where the hospitals get overwhelmed. You saw in Wuhan, they built a hospital in 10 days. That's not going to happen in other countries. And Italy, if you read what's happening from doctors on the front line right now, it's just impossible. The medical staff there is also getting infected. And once you get to a point where the hospital beds are full and there's no ventilators to help people breathe, it doesn't matter how old you are, your chances. Don't downplay the risk. Always look at the risk and be prepared for it. Yeah, but you said nobody died under 70. That's completely erroneous information. So let's leave it at that. The most dangerous thing in this environment for everyone is spreading misinformation. The most dangerous information I've seen over the past month is people comparing the coronavirus to the flu, because what that does is that makes other people believe that they don't have to prepare and take precautions. The most dangerous things I've seen people do, because people's lives are definitely affected by it. Hope for the best. Hope this is not as bad in the end as the flu on a larger scale, but that's not what the evidence is showing. No, the death rate on the flu is 0.1%. The death rate on the coronavirus is currently 3.6%. The WHO says it's 3.4%. That means the coronavirus is 34 to 36 times more deadly than the flu. They're absolutely not comparable. They're absolutely not comparable. The coronavirus right now, and this is rising, right? This is a rising number. Right now, it is 30 times 6 more deadly than the flu. This is not even close. You don't close countries for the flu. You don't quarantine 500 million people for the flu. The Diamond Princess, 696 people have gotten sick on the Diamond Princess. So far, 46% have recovered, 1% has died. If this was the flu, you would not have seen one person died. The death rate on the flu is All right, anyways, we've given you, right? That's the most dangerous thing I've ever heard anyone say in the past month, is that the coronavirus is like the flu, because it's given other people the ability to believe that. US equities now, 1 hour after opening, are pretty much unchanged, close to the lows. The most immediate thing right now is tomorrow's ECB. We're going to receive reports later in the day about, I included one in the newsletter yesterday about the 3 options that the ECB can move on. Obviously, it's a great unknown what they're going to do and whether or not it's going to be enough, or whether they're going to come in and do whatever it takes with Mario Draghi style bazooka. Now, Christine did say today to everyone that the rest of the governments in the EU need to step up. It's got me concerned. But then again, I am always looking for where the risk is in everything. Most assuredly in the health of my life and friends and family, i.e., the coronavirus. Yeah. So we have a few more pairs that I want to definitely take a look at. Pound Canadian dollar. There was something else that we looked at with the pound today that is of high interest to me, and it was the pound New Zealand dollar. That remains my focus. But here you have the pound Canadian dollar. Also, if you look at it, this looks really bullish. As you can see, this is breaking out here to new highs, new yearly highs, not new yearly highs. Look at this strong. Where I have my mouse, this strong resistance. We get back, we're back to it now, breaking above it. This looks like a really interesting area. This looks like a really good, interesting area. It looks like we're going to come up and test actually those multi-year highs. I like this trade a lot. I also like the pound New Zealand dollar, pound Canadian dollar. I wish I would have got ahead of it a little further down over here. For the last 2 weeks, it's been, I think this is definitely has a good probability of continuing. I'm not in a rush to obviously jump in a trade this time of day today, more focused tomorrow. But both these trades I want to come back to: the pound Canadian dollar and the pound New Zealand dollar. And I will be. I assume the pound Australian dollar is looking similar. Let's check it out. Whew. Uber bullish. Uber bullish. It looks good. They all three look very good. Pound US dollar. This doesn't look so good. Having trouble over here. US equities now down 3.25. Not looking good over there. Again, though, still, although this important area of resistance is being rejected, and if we do get rejected there over again, I would be betting on dollar versus the pound over here. But it's still sideways. It's still sideways. No edge for me. Jesse, these were the take profit levels that we looked at. We got out over here. I thought I was a hero. All right. So again, I'm waiting for further retracement here on the New Zealand dollar, Swiss franc. I will be happy if I get just wait this out and wait for a better entry to get short. But in the long run, I don't know that these were the lows put in. Again, watch that interview today with Raul Powell, and he's someone who has really been able to see the dynamics of what has been going on, be ahead of them. And now he's not calling anymore for a recession. He's genuinely calling for a depression. There's not one person here who has any idea of what that means or can understand that, right? There's not one person here who can understand that. So I think the best thing right now, oil inventory is 2 minutes. Wilford, that I'm 100% there with you. I really don't know what side to take in the market right now. Therefore, I'm not. A clear example of when things were clear were last week and the week before that. Not only were things clear, you could push them. Probably should have pushed them a little more. But right now, things are incredibly murky, incredibly choppy, and not clear at all. And therefore, the best thing to do is just kind of sit on the side, right? That's the smartest thing you could do. Um, hey, appreciate that, Full Spectrum Trading TV. Um, so the reason that I am in this moment really enforcing that, because you have no idea how important it is. We talked about it yesterday. The worst thing you can do is get in front of the screen, and before you even do your analysis, and I don't think that's most of you. I genuinely think anyone who participates in here regularly does an extremely good job in preparing their trades and doing their analysis. And I think that is one of the most important lessons people have learned who have spent time here trading in this channel with this community, is the importance of setting up their trade, the importance of doing their analysis, and then the importance of waiting for their trade to come to them because they've seen results from that. That's number one. The worst thing you can do is put on a trade to put on a trade, right? To put on a trade and then all of a sudden really start like digging in and doing your analysis. That's retarded. Do not do that. That is, do not trade to trade, because if you're doing that thinking that you're going to be building up your account, you're not going to be building up your account. You're going to be grossly mismanaging your account, and you're going to be losing money. This market right now, although right now is unclear, this market overall is extremely desirable. There's expansion, there's volatility, things are moving. There is enormous opportunity, right? It's just not in this moment. Things are unclear, right? And it makes no sense getting caught up in that chop. A lot of things are in no man's land. And why? Because they've had such big moves over the last week and two, and then are starting to retrace them a little bit. But they're hung out in no man's land. There's no edge, right? Which is why I'm waiting for such a drastic move on the euro Canadian dollar, which could happen tomorrow, which could very well happen tomorrow because of the if there is action by the ECB. And I'm just prepared for it ahead of time. I don't want to afterwards be like caught off guard, right? I do believe this is something to watch over here. That if you ask me, look, this is off $100 from the highs. What's going to outperform over the next year, gold or the euro? It's a no-brainer for me, right? But I think that the smartest way to play this one is by first positioning short the euro versus the dollar, and then maybe sometime I'm waiting. I don't know what's going to happen next week with the Fed. If the Fed comes in with a cut, it might make sense to get. I don't know what happened on gold. I don't think the time is to play the gold long the gold versus dollar just yet. So. There you go. Thank you, Jesse. All right, just one other uber important thing to share with you all right here. So, I'm here, all. Bear with me. Jesse, just sent this over. So this is the percent of the coronavirus cases by age group, right? And then down over here is deaths by age group, right? So you could see, although the majority of the deaths occur between 60 and 80 years old, right? You could see there's also been deaths. There's been no deaths between 0 and 9. I thought there was between 10 and 19 years old, 20 and 29, 30 and 39, right? The majority of the deaths occur between 70 and 80 years old, but there have been deaths in almost every age group except for between 0 and 9. Now, the other worrisome piece is that in China, they did say that you could catch the coronavirus more than once. And what the people that catch it the second time, it just annihilates them. What happens if this is like the flu in the fact that it comes back seasonally and every year, right? What happens if people catch it, the first time and then the next year catch it again and it annihilates them, attacking the nervous system? It's not the flu and it's not a joke. The worst thing you can do is not be prepared. And the best thing you can do right now is start limiting your contact with other people. Why are we even talking about the coronavirus? Because it is the biggest black swan factor affecting the entire global economy right now. Now, things were a mess and set up for disaster before the coronavirus entered the picture. There's no question, but it was just the pin that's popping the bubble, right? 2 weeks ago, we were at all-time highs in the markets. Things have changed quickly and drastically, and it's not because there's not a reason for it. Yeah, we could put that chart back up. You could take a screenshot. Actually, I just included in the link for you. There you go. You could take a look at that in your own time. Oh, what's going on March the 27th? What is going on March the 27th? That's a Wilford, that's a really good observation. Let's take a look here, saying that the pound is rising versus the dollar with the rate cut. First of all, what's the dollar doing in general? Now let's take a look at the pound US dollar. Wow. Yep. That's a good observation. I definitely don't like this. My eyes are immediately attracted here to here, and we're kind of in the middle of that. It's a super solid observation, Wilford, and looking for things like that is really really good sign of a good trader. Nevertheless, even with that information, for me, we're just kind of in no man's land. And the worry there, though, like what happened yesterday, you saw yesterday the yields start rising in the U.S., and then you saw some pretty strong dollar. Here it is, some strong dollar moves. That could happen again, and that's why things are so murky right now. That's why things are so difficult. So I have to say, this is definitely the weirdest vibe we've had in the room today, maybe with the exception of one other day. But yeah, overall, man, you guys are great. Yeah. The death rate for the coronavirus, officially by the World Health Organization, is 3.4%. These are numbers from the World Health Organization and the CDC. This is all the data right here. Um, you're looking at the death rate is 3.6% with the most up-to-date information. It's really not like this is not subjective. This is completely objective. You're looking at hard data. You're just looking at hard data, and the death rate is 3.6%, and that's rising. It's rising. It's not going down, right? But I'm not looking to trigger people. I'm only looking to you want to anyway. You have to look at what is the greatest risk, and you have to hedge against it and be prepared, right? The people in Italy right now are saying the one thing that I could recommend to everyone in the rest of the world is start limiting your contact with people. You know, um, one girl saying that the last time she saw other people was 17 days ago. She's thankful every day that goes by because there's less of a chance that she came down with the coronavirus because of the incubation period. Up to what it could be almost 4 weeks. So she's getting closer every day to knowing that she's completely safe, and that she self quarantined her parents who are 79 years old at the same time, and she's so grateful she did that because if they do get sick, their odds are not in their favor, right? So you have to look at what your risks are. Yeah, hopefully this thing blows over. Hopefully this thing blows over. Thank God China is showing us signs that they're doing well. We're seeing it in South Korea. Hopefully this thing blows over. If it doesn't, you have to be prepared. Well, I mean, this is something really, really worthwhile talking about, Thomas, because you're right about the repo, the drop in oil. But see, if those things were happening without the coronavirus, we'd be okay. But with the coronavirus taking economies to standstills, I really think that is, it's, I don't think we'd be seeing the stress we're seeing in those other places without it. We would not be seeing oil trading as low as we are, because if the demand did not drop out of China for oil, which is the majority importer of oil in the world, then oil would not be trading anywhere close to where it's trading now, and it would be trading above $50 a barrel. So that's 100% directly related to the coronavirus. Yeah. So the one thing missing there, though, is Peter, is that first you need to look at, if 60% of the population, 60% of the U.S. caught the coronavirus, and then out of that number, which is somewhere around 180 million, of 3%, died. That's the number you're looking at, and that's what the official numbers are. The expectations are between, on the low end, between 1.4 million and 68 million deaths worldwide from the coronavirus. This is not the flu. That's what official estimates are. Um, and if things got on the level of the Spanish flu, of that type of infection, which is entirely possible with air travel today, then you're talking about much greater numbers. Well, let's think that through for a second, Iron Man, because it's not that it has a 2-3% chance of killing you First of all, it has a much greater chance of killing your loved ones, right? You're talking about parents and grandparents. Even the greater effect is the fact that if it gets it to be out of hand, if you see things that are happening inside of Italy, happening elsewhere, you're going to see supply chains cut down. If you're not prepared, if you don't have food at home right now, if you don't have medicine at home right now, you're not going to be able to go to the store and get it, especially if you live in a city. So it's you have to think it through a little, further. That's all. Yeah, the death rate's not 3%. It's actually 3.4%. Official number by the World Health Organization, and the hard data presented here. If you're arguing with that, then I don't know what you're arguing with. It doesn't make any sense. This is all the hard data numbers. These are official numbers. So if you're arguing that, then that's it. All right. Famous quote from Satoshi Nakamoto. If you you know, if you don't get it, I don't have the time to help you understand. All right. So most important thing today, all those links that we looked at, there's a lot going on. This is a very fluid situation right now. More than ever, you need to be aware of the bigger picture and what's going on. I'm going to send out today, including in that newsletter, all those links for you to dig into, including that interview with Raul, which I'm beyond excited to get into myself, including this link here from Danielle. This is why you want to own gold, by the way. This is what Thomas is talking about as far as the problem with the repo market. Look at what the expansion we've seen in the balance sheet. We were all talking about how this was happening. Markets are trading at all-time highs, yet the Fed is expanding their balance sheet at an enormous rate. Obviously, we knew something was broke before the coronavirus hit, but the coronavirus, and this is the point Raul is going to make, is that the coronavirus is now taking a situation that would have sent us into a recession, now into a depression. So if you're equating the flu with having the possibility to take the world economy into a depression, you're not getting it. Yep, I've been um you know, maybe Trump's right. Maybe by the end of April, this kind of fades away, and I hope I pray to God that's the truth. Listen, obviously, I've been extraordinarily supportive of almost all of Trump's policies and decisions, except this one. He's dropped the ball. The CDC has dropped the ball. You know, there's nothing else to say about that. We're done with that. So we're done. And when I say that we're done with that, I mean that everyone here for sure, because we've been aware of it since the end of January. We've all been aware of the situation. In February, we were like, all right, okay, and then when things got to the point we need to be concerned, we're concerned. Everyone here is aware of it. There's no need for us to discuss it further. And when I mean we're gonna leave it there, that's done. All right. No, that's not true. You guys do have a say, and he's completely gone. So that's not true at all. This is our community. So that's that. All right. So as far as the rest of the day, though, listen, we were very clear. Wilfred nailed it on the head. And if anyone does have any clarity that they see or something that they're really interested in looking at, let's take a look at it. That's what we're here for, and that's what we do. But what I'm seeing is definitely, a lot of unclarity. I'm seeing the dollar pick up, right? Specifically here, dollar euro. What happens if we take out yesterday lows? This is speculative, right? If we take out yesterday lows, and which would mean this support also, is that, you know, are we? Is it a good time to take a short here on the euro US dollar leading into tomorrow's ECB? Maybe, you know, maybe. You're also seeing, don't forget right now, you're seeing, we talked about eventually, I talked about eventually, this correlation we've seen between the S&P and the euro will eventually be broken. Is that happening right now? I mean, there's a good possibility in my mind. Yeah, Nick, 100%. When I say, yeah, there's no, when we need to talk about it, we'll talk about it, how it, but of course. And that's another thing, Nick, good. That's kind of my base case. That's why I'm looking to take the short. I'm looking at I'm looking at this gold euro, but I think that to form this synthetic pair, you need to go long. I need to go long gold versus dollar and short euro versus dollar. And I think that taking the short on the euro US dollar first right now and waiting out gold is going to be the way to trade that. Yeah, let's take a look at US dollar, Norwegian krone. Wow. I mean, the dollar's on the move here. I can't get, I don't know. I don't focus on the exotics. Um, Clearly, and I don't mean to, talking about this now, but clearly the entry was down here as we came back into this broken resistance and then it held that support. I mean, that's hindsight. So I'm not trying to say that. This is a weekly chart. Breaking out to new all-time highs here. Is the dollar firming up? Did you ask if you should short the US dollar versus the Norwegian krone right now? There's no way. If that's the question, I could help you out. There's absolutely no way I would do that. And look at this chart. This is one way up, top right, and you don't short highs, right? The way that you trade this is you're in a clear, strong uptrend. You wait for any pullbacks into support. So where's our closest support? There's big support down here. There's big support over there. And then we have, I mean, that's the closest support. And there's also support right here. And there's nothing else. That's the closest support. So as far as what to do, it's very simple in uptrends, and this is an extraordinarily strong uptrend. You look to buy against support, into retraces into support. There's zero reason to look to fade this, and that's the single best thing you can do to improve your own personal trading is stop trying to buy bottoms and stop trying to sell tops. It's much easier. It's clear uptrend, buy off of supports. And Nick, I want to give a big, hold on a second over here. I want to give a big shout out. Get that up for you 1 second. This is not online, is it? Bitcoin under pressure. What is going on? I'm sorry about that, y'all. I do apologize. Wow. Trump's awfully quiet with the markets down. Dow's down another 1,000 points. All right. I just want to thank Iron Man. I want to thank Iron Man for coming in here, giving that thumbs down. You know what? Listen, he needed to go because the most important thing to me is the overall community. I look at this place as a really place that I look forward to being, a place where not only I get to learn and share knowledge, but also just be in a positive and supportive environment. And I'm extraordinarily lenient, but when that is jeopardized, you know, Gabriel and or anyone else who went ahead and voiced their frustration, this is your community, and I respect that, and I feel the same exact way. Mark, I want to see what you looked at on the 1 hour here. Nice, Wilford. Wilford, you're on fire. For real. I think I mean I listen. It looks like we're topping over here. Mark was on top of this about 20 pips ago. Um, I'm watching over here. Obviously we all know the ECB is meeting tomorrow. We all know the risk is that they under deliver. We take out this area of support though that we challenged yesterday. This is where the low was yesterday. This area of support right over here. We take that down. I think that it could be a pretty strong preemptive entry. I know Mark got a better one over here, but focusing in over here right now, and for me, it would be a longer double play into the euro versus gold. Um, I like it. I think this is an interesting place to focus your energy. Um, yeah, the Norwegian Wilford, although I'm not an expert on it, so I'm not going to add my insight. They have what they have. This is the largest fund in the world, right? It's like, is it 1 trillion or $2 trillion? All the oil money. It makes complete sense what you're saying, Wilford. Although I cannot elaborate on it because if I don't know something well enough, I'm not going to do that. And then we wanted it. So pound Japanese yen. I think you're in no man's land. I think you're in no man's land right now. I'm looking at here at this trend line support primarily, and also this support over here. You can see that the bottom support is where the price peaked into, but it's the trend line support that held on the daily, and we don't got any type of resistance to well above us. I'm not going to turn those over right now. But this is resistance above us, and this is support below us, and we're kind of in no man's land. Um, I don't see an edge. What I am looking for and hoping, of course, we can continue to see further strength as we are today in the Japanese yen, going into New York at least. But next week, Bank of Japan is set to ease, and any type of retrace in the yen in this environment will be an opportunity to get relong the yen. But we're coming off a big move, a huge move on the yen pairs, and right now we're consolidating. This is not where the edge is. I think so, Mark. I mean, I 100% think so, but at the same time, again, Christine was putting the onus today on the governments need to do something, and the possibility exists that they disappoint. Although I do think that I think we're seeing much going to see much lower here as well. So, by the way, John, great to have you back here with us. Great. It makes me so happy. You have no idea, because it's been like probably about 11 years. So happy to see you here. I do very much like here the pressure I'm seeing on the euro US dollar. I also want to tell you why. This is kind of what Wilford was doing earlier when he was talking about, hey, the UK cut rates, but the pound's actually outperforming the dollar. We looked at it and decided, you know what, it's best to stand aside on that. And I did like the observation very much. And you could see that that's changing. The dollar is since made a 0.2% gain. But at the same time here, we've noticed this tight correlation between the S&P and the euro. We did speak about eventually that's going to break, but now you have the markets down over 3%, and you're seeing that correlation break today with the ECB getting ready to meet tomorrow. So that's something to keep an eye on over here. I like it. Again, here's the post from yesterday in the newsletter where we're talking about the euro Canadian dollar. If we do see the ECB come in hard, and we see that powerful move of depreciation versus the euro, I'm going to look to grab it versus the Canadian dollar, and or get my initial position on here, which may even be today. Watching that support over here, yesterday's low, very closely. Mark 100% got the better entry. I'm all about defensiveness and safety. And if we break here, this could be a good entry. So yeah, definitely. I have a lot of exciting stuff to share in today's post, with a lot of links. If I have the one with Raul, I'm really excited to watch. I agree with you. I'm just not sure how much they could do to stop the power of the yen. And what was beautiful about this is one of the most beautiful things that happened all year. Look how ugly all this looks. Let me go to a weekly chart because things have gotten so crazy, just so you guys could see it. Because this was one of the coolest things that happened all year, and it was this breakout of this 5-year trend line to the upside, right? So I'm going to get into this 1 second, but it was the failure. right? And it was 109.71 where we all attacked, right? Now I know Blair and Rustin got short up here. They got short over here. Now, Blair, we've talked about just trying to reprogram those neurons into, holding positions when's the appropriate time. And the only way to do that is simply look at the past mistakes in order to really retrain the brain, right? Because I did the same thing, although I took mine on the, like, for me, this was a failure when we broke 109.71, and that's when a lot of us got really long yen pairs. But I sold mine too soon, right? Same thing, Blair. You were short from up here, so you had the gift of really holding this a lot longer. And why I bring it up is just to really, the best way to improve is by focusing in on, you don't want to call it a mistake, because this was a great entry. And at the time I said it, you guys were completely all over it. It's not so much mistakes, but what can we do better? Where can we improve? Yeah, back to the euro, a close below this yesterday's low would be, I would say, very, very bearish here going into the ECB tomorrow. And again, it's not a sure thing. It never is. The ECB could disappoint tomorrow. All right, everyone. I think that's it for today. I don't think we're gonna do any evening session today. There's a chance, and listen, if we do, I'll just update you through the Telegram if I decide to jump online. But definitely look out for an update from me later in the day. I'll be preparing throughout the day on through the newsletter, and I'm going to be doing some systematic work right now. So thank you all for helping me through that little bit of rough waters earlier. We want to make sure that we keep everything in here with the vibe that we all appreciate, look forward to, and thrive on. So sometimes we got, there's actually only, we've been streaming now for 4 months. For about 4 months straight. It's the only second time we've had to do something like that. It is what it is. I hope you all have a wonderful day. Thank you. And just want to point out, Wilford, you were on fire today, really up in your game. And that's also something that we've always, the whole point is everyone improving their game and then helping the greater whole as a whole. So everyone, I'll talk to you later. Thank you. That's it for now.